What's up, everyone? Welcome to another Wealth Webinar Wednesday. It is March 4th. My name's Stephen Nagy. I will be hosting the show today along with my co-host Brian Fouts and Craig Yenny. What's up, Brian? What's up, Craig?
Hey,
Well,
good to see you.
yeah.
Happy Wednesday.
Happy Wednesday. That's right. All right. Well, Mr. Naugle is jet setting around the country somewhere. I actually don't know exactly where he is. I know he had an event that he was headed to. Maybe Dallas, Texas. I don't know. Who knows? He's out developing relationships and growing the knowledge base for us somewhere. So we will be holding down the fort today. So what we're going to jump into today is we want to get into what becoming your own bank is all about, what the infinite banking concept is, and then how we can use that to really start building our wealth. And there's a couple ways we can look at this. And while I have Brian and Craig with me, I know they're with me for a limited time today. I'm going to take full advantage of them. So just a real quick introduction if you're new here. Craig Yenny is who we call the master of spreadsheets, the man behind the numbers. And what I mean by that is we launched a proprietary revolutionary software program last year called the BYOB Vault. And what that did is that took the infinite banking concept and visualized it. All right. So I'm just curious, how many of you on here are visual learners? How many of you like to be able to see things visually to really be able to fully grasp and understand them? How many of you on here are you would consider yourselves more analytical? Where you almost like you love spreadsheets. You guys live in spreadsheets. You use spreadsheets. Anybody analytical on here? So quite a few of you. Now,
It used
on
to
the
be.
opposite side of that, how many of you prefer to just kind of learn something and go do it? You're like, listen, I get the concept, I get the way this works. I don't need to see the numbers, I don't need to see every single little detail. I'm just ready to go out there and make things happen. I'm ready to take action and do it. Any of you guys like that out there? Okay, analytical, creative. There you go, Lucy. So you're combining those two sometimes, can. So, all right, so we got a good mixture of both. Now, the reason I asked that question is because that's kind of what we're going to talk about today, right? Is for many, many years, myself, our team, Chris Naugle, we taught the infinite banking concept. And at the end of the day, the infinite banking concept is exactly that. It's a concept. It's a way to look at money differently, and the way that you save money, the way that you warehouse and store your wealth, and the way that money flows through your life. Okay. Most people take their money, they put it into a traditional bank. And whenever they need the money, they go to their checking account or their savings accounts. They take the money out of the bank and they spend it on cash. Or if they need to buy something and they don't have enough money, they go and they finance it through a bank or a loan company. And so they borrow money and then they pay interest to the bank to be able to get that money. We all know how this stuff works, right? And that's how the majority of people use and flow their money. Well, what we do with the infinite banking concept is we say, okay, well, instead of giving somebody else's bank your money, we create what we call a banking system. And we do this by using a specially designed and engineered whole life insurance policy. More to come on that a little bit later. But the bottom line is we create this banking system using this specially designed whole life policy, and then that allows us to take our money that we earn and put it into one of these policies, into this banking system. So instead of our money going to somebody else's bank, it goes into our banking system. And by doing that, it gives us a lot of advantages over storing our money in somebody else's bank. Just a couple of those. And if you've been around the campfire, put them in the chat box. Why would you rather store your money that you're earning in your own banking system as opposed to somebody else's banking system? Those of you that put twos on the screen earlier, let's see how close you've paid attention. Why would you put your money in your own banking system as opposed to Wells Fargo, Chase Banks, Bank of America, something of that nature? Let's see what you guys got. Okay, so the first person said guarantees a death benefit. Absolutely. So that's something that usually we save to the end, but absolutely, it is a whole life policy, meaning there is a big death benefit associated with that. So just as an example, using that one, if I put a bunch of money in Wells Fargo and I have $100,000 in there and I pass away, my family's going to get that $100,000 from my checking account. Okay, if I put $100,000 into my banking system, my whole life policy, and I pass away, my family's going to get, I don't know, a million, 2 million bucks, depending on how that policy was designed and what that looks like. But I'm going to get significantly more through the death benefit my family is compared to what I put in. So that's one reason. Let's see. Anna Scott said control. Okay, absolutely. Now, I will say we put our money into someone else's bank. We still have control of it. We can go to the bank, we can take that money back, we can use our debit card, our checks, we can use our ATM card to
You
get
hope you
cash.
can get it back.
What's that, Brian?
Hope you can get it back.
Yeah, I mean that's a good point too. I mean, I did go to the store, the bank recently. I think I took out like $12,000 for something, and they did make me come back 2 days. Like they didn't have the full amount there right then. So that's one thing. But what else do you mean by that, Brian? Expand on it.
Okay, so let's rewind back in history. What used to happen when you would go and deposit money at a bank? They would give you a COD, a certificate of deposit, or a silver certificate.
Hmm.
That's what you now own. You didn't own the money, you didn't own the silver, you own the piece of paper, and the bank owns the money or owns your asset now. So if you ever read the fine print on a bank, when you open up a checking account, it's kind of scary. They own your money. You have a COD. They don't give those out anymore, but essentially that's what you do. So they actually truly control your money. You don't. So think back on a run on the banks. When you have a run on the banks, they can't pay you all out. That's what happened in of the Great Depression, but it happened also to some banks back in as was it 2020, 2021,
Yeah.
Silicon Bank. Yeah, so just kind of keep that in mind is that you don't truly own that money. The bank controls it.
Yeah, and Chris was talking about a little bit on the YouTube video, and we opened up here, the Federal Reserve and what's called fractional reserve banking. And in
Ooh,
fact, what is it, Craig? For every dollar that the bank accepts, they can lend out 10x,
At
10.
10
least,
times? Yeah, at
yeah,
least
at
10
least.
times,
And
Nine to
right?
there's
10.
I know a lot of people like vacations and holidays. If you go back in history and you look at the bank holiday of 1933, it wasn't a vacation at all. But it's interesting because you look at what was going on at that time. Everyone was, going to the bank to get their money out, and banks were failing because they didn't have the money. So the banking system got shut down. It's a bank holiday. But anyway, we don't want that to happen again, but it could happen.
Yeah, right. I mean, so that's exactly how banks operate. So we give them our money. So technically we're giving up control because then once we give the bank our money, they then have the ability to go out and lend that money to other people. They can do what they want with it. They don't take our money we deposit at the bank, put it in a box and wait for us to come get it. They immediately start moving that money. And that's a big principle on what the infinite banking concept is built on. And, instead of us giving. And let me just give an example. I'll give some examples as we go here, guys. I'll just show some stuff as we talk about it. Here's what we typically do. And with infinite banking, we want to be the bank, become your own banker. We want to act like the banks do. So typically we take our money, we give it to the bank, and let's just say the bank pays us a return in like a savings account. Well, like I said, the bank then takes that money and they immediately start moving it. So they might take our money and they give it to somebody for a home loan on a mortgage. Well, what are they going to charge that homeowner for a mortgage? Let's say where they charge them 7%. Well, that homeowner is going to take that money, give it to the sellers. The sellers are going to put it right back into a bank. And then the bank's going to say, okay, well, that person now needs to buy a car. So they go to the bank, they get a car note, right? They give it to the car dealer, they buy the car, and then the money goes right back into the bank. So the bank does this over and over and over again with various different types of loans that they give out. But at the end of the day, what is the bank really doing? Well, they're creating what's called a spread. So they're actually making
Big one.
money off of your money. So if they're paying you 4% in a savings account, but then they're charging somebody 7% for a mortgage, they just made a 3% spread on your money. Same with the car. They made a 4% spread in that scenario. 5% spread on the home remodel loan. Maybe they made an 8% return on the debt consolidation loan because it's unsecured. They can charge a higher rate of return. But at the end of the day, they're making 20% on your money. But if they're paying you 4%, think about it. That's really a 500% return on your money. So for every dollar you're putting into the banks, they're actually making between 400 and 1600% off of the money that you're leaving there. So, and you guys can look all this stuff up. It says it right here. So go to the website bauerfinancial.com and you can go and you can look at if you have a big bank, if you have local banks, but bauerfinancial.com basically does analytics on banks and how they're doing financially, what they do with their money, and you can look at all this stuff. So it's very interesting if you really want to get into the details on this stuff. But I wanted to bring that up because when we talk about giving up control, while we can still get our money back in most scenarios in a perfect world, there are scenarios where maybe we can't. And more importantly, we're giving up the banks using our money instead of us using our money. Now, when I show you that we're losing 400 to 1600% by the banks using our money, what does that really mean? Is that money that we potentially could be making instead? Does that make sense?
Hmm.
So instead of the bank making those kinds of returns by lending our money on mortgages and these different types of loans. What if we were able to put it into our own banking system, then take that money out of our banking system and then give it into a real estate deal known as private lending? You guys hear us talk a lot about this when it comes to private money club. So, Craig, and this is where I want you to real fast talk about gains projectors. So I just explained to you guys the concept of controlling our money, stopping the bleed, and how to be the bank. Take our money, put it into our own banking system, borrow it out, and then and I'll get to the other reasons why we want to put it in there first in just a second when it comes to guarantees, uninterrupted returns, tax-free growth, and the rest of it. But just right there, we put it in the bank just like somebody else's bank. Instead of a checking account, we take it from the insurance company and then we lend it out on a private money deal, let's say at 12%. Okay. Sounds great as a concept. But how many of you maybe just don't believe me that's possible? And I'm gonna give you another example. But that's what the visualization of the vault does, Craig, is it takes these scenarios that we talk about and it shows you exactly what that looks like. Is that right?
That is right. And it's one of those strategies where, there are a lot of people on here said, "Hey, I love spreadsheets. I'm analytical. I like to see the visuals." And that's really what the vault is there to serve, and the purpose of it is that if you just take what Steven said, you're going to do a private lending deal. If you're funding from your whole life policy, or you're funding from a whole life policy and maybe lines of credit, how does that money flow through the system? How do you treat those gains? How do they pay back the loans? Do they pay back the loans? And so the vault has the methodology for you to model, evaluate, and then once you get everything set the way you want, you go and execute. And so we have a strategy now and a system that will allow you to see, is this strategy going to work if I deploy my money this way? What if I pay my loan back this way? How is that all going to work? That's what we're doing inside the vault. And later today, I don't know exactly what time it's going to be, but we're releasing the gain projector. For anyone that's out there that's been waiting for the gain projector, it's coming. We've been working on it for about the last 4 or 5 months, and it's finally hitting the street. So it's going to be in the vault. So if you're a vault subscriber, you're in the portfolio plan, you're just going to see these new features. And then you can go in and take those extra steps Steven's talking about, where you might have been in debt at one point. We got you out of debt. Now we're taking that money we've capitalized in the policy and using our lines of credit and putting that money to work and taking it to the next step of wealth building. So it's something we've been working on and we want to share with the whole community here.
Yeah, absolutely. And I have an example of kind of a rudimentary version of showing the concept working when it comes to putting the money in the policy and then use it for private lending. I'll show you guys in a minute after we cover the other reasons we want to put it into our own banking system. And then definitely hop on with Craig on cracking the vault or watch these videos and then go to byobvault.com and get all this, right, Craig? And so check that stuff out to see like the more advanced and how it actually works for your situation now. But I'll come back to that in just a second, show you guys. But what are some other reasons that we put our money into our own banking system instead of somebody else's? So let me scroll back up.
Yeah, I mean, I like the one. I mean, Robert says, uninterrupted compound interest. And that's a good one right there. I mean, it's because some people will look at infinite banking and say, oh, I can get a higher return over here. But when you say that, you're missing the overall bigger picture of why we be our own bank, because it's uninterrupted. That kind of interest does not really exist very many other places outside of infinite banking. But what that means is that you have money over here earning you an interest. It's also over here, if you want, doing something else, whether it's earning you an interest, paying down debt, building wealth, whatever it is, you're doing those things at the exact same time. So imagine if you had money in, like, let's just say a 401k earning 6%, but you could also borrow that money out of a 401k and put it over here, but you're still earning 6% on the same amount of money. That's what infinite banking is doing. So yeah, so uninterrupted compounding is it's amazing.
Yeah, it's truly powerful. And so going down this list, Jalen said, because money never leaves my family. Absolutely right. So instead of going to the bank, taking a loan, let's say they charge you 7% for a car note. Well, that's 7% you're paying the bank. You're never going to get back for the rest of your life. It's gone. So the alternative is to create our own banking system, take the loan from ourselves. Remember, you're the banker. You're now in charge. So take the loan from your own bank. Now, when you take the loan from your own bank, what are you going to do? You're going to be what we call an honest banker, and you're going to pay yourself back interest just like you would pay somebody else's bank back with interest. And so it's very important that not only do you have your banking system set up properly, but you use it properly. You become a banker. You become and understand how this process actually works. So, Jalen, you're absolutely right there. So, when you go buy a car, or I've been looking for a car myself right now. When I go buy one, I'm going to take a loan for my policy and I'm going to set up payments back to myself the exact same way that the finance company would have done it for me. And Craig's going to help me set that up using the vault as well. It's something else that the vault can help us do is create these loans, which is really, really cool. So that you're absolutely right there. Craig, you said uninterrupted compounding. We just hit that. Carrie said you keep it and get to use it at the same time. Yeah, Carrie, exactly. That's what we were just talking about. So the money goes in the policy. Every dollar that goes in, it starts uninterrupted compounding. And by the way, that's guaranteed growth. It can never go down. It's guaranteed to grow every single year for the rest of your life. The government tells us that the growth inside that policy is tax-free growth. So all the growth within that policy is tax-free. You're never going to be taxed on it. When your family gets the death benefit when you pass, it's tax-free. As long as everything maintains the life insurance contract. Let's see. So benefit can continue to grow even though loan taken from it. Yeah, so that's what they were saying too. You're having that growth while you're simultaneously taking out and using it. Now, so far we've talked about using it to buy cars. We've used about it in a real estate deal. What else can you do with it? What else can you borrow from a policy to do? How about debt? Does anybody on here have any debt by chance? Does anybody have any credit card debt, student loan debt, even housing debt? Maybe personal lines, business lines, anything like that? Does anybody have any debt on here? If so, and we're going to talk about the economy in just a second and what's going on. But first off, if you have debt, you're not alone. Um, we have record credit card debt, consumer credit card debt in this country right now. It just went over $1.25 trillion dollars. And a lot of those are starting to default. So you're not alone. But our interest rates high or low right now? They're high, right? Especially credit card interest rates. So all of that money you're paying on these credit cards is bleeding from your family right now. It's leaving your family. So, we could talk about all these exciting investments. I can show you real estate deals right now to make 12, 15, even 20%. But if you're paying 22, 25% interest on a credit card, you can make 20% returns, home run returns on an investment, but guess what? You're still bleeding money. So the first thing we need to really look at is to get rid of that debt. And that's one reason so we don't bleed money. But number two, we're in interest economic times right now. Everything's at all-time highs. And
Yeah.
typically when that happens, we see a pullback, we see a recession, we see tougher economic times for a while. So we go through these market cycles, right? And so if we have potential tough economic times ahead, do you want to be heavily leveraged and in debt now? Or do you want to be prepared for these tough economic times? You want to be prepared, right? So we want to get rid of that debt. We want to get our credit in a place where we can even take advantage of these economic times. Because again, if I'm losing all my money to paying off debt and all this interest and everything like that, and all these opportunities arise when the economy changes, am I going to be able to take advantage of those? Absolutely not, right? So we want to make sure right now, especially in these times we're in, that we're tackling that debt, we're getting rid of that debt as fast as we can. And one of the really cool things is that we can show you how to use your infinite banking policy along with potentially velocity banking, maybe the equity you have in one of your homes, something like that, to pay off your debt a lot faster than otherwise possible while still building debt or still building wealth and preparing for the future. And I know, Craig, that's up until now that we have the gains projector, that's what you've really been able to help a lot of people with in the vault, right? I mean, I think we have like 5, 6, 700 users at this point, and most of them are using it for debt payoff.
Yeah, we have a large majority of folks in the vault that are focused on debt pay downs with infinite banking and velocity banking strategies, but we also have a lot of people in there that are using the vault for policy loan management. So when you take a policy loan, just like Steven was talking about, he's going to buy a car, we'll structure a policy loan. It'll have all the payback tracking. And at the end of the year, for tax purposes too, if you need to, you could print off say you had it in your business, you could print off a loan payment history. The way I used to do all this stuff is in spreadsheets. I still love my spreadsheets, but we've transitioned all this stuff into the software just to make life easier for everybody. But yeah, I'd say a majority of the people right now are using the system for debt strategies, and it's super cool. I was just talking to Marius this morning. He had a call with some folks, and He said the guy literally fell out of his chair when we were able to show him how he'll get out of debt and recapture money into the policy. And most people, when they're going after debt, they're going after what I call the no strategy strategy. They're just throwing money at it, refinancing, get a bonus, let's throw some money over here at this debt. There's not really a cohesive strategy of how to attack this debt and go through and get it out of your life. We want to get that debt out of your life so that we can go build wealth. But anyway, lots of fun stuff happens in the vault around debt and debt plans and management.
And one thing, Craig, I would say about the vault is what it does is we always say that in order to do infinite banking well, in order to use it effectively, you've got to change the way you think around money.
Hmm.
Because as you go through life, how do you learn about money? Well, I mean, to be honest, we don't, in fact, but we learn it through social media, through family, through experiences, through employer, the government, banks, by the way. And unfortunately, a lot of that is not in your benefit. It's in somebody else's benefit. And yet the biggest challenge when it comes to infinite banking is you've got to change that mindset. And it's called subconscious programming. I won't get into that here today, but I love that topic. But you've got to reprogram that. And obviously being around us, being here is a great first step. But what I love what the vault has done is it takes the knowledge that we have, that Craig and Steven and Jason and all of us have, and it put it into a resource that allows you to actually access it, use it, and see it in a visual way, which is helping so many people from the mindset perspective because now they're in the driver's seat. They can play with it and start to reprogram themselves, but they're seeing it in real time through the vault. And that is unique, very unique.
Yeah, absolutely. And the other thing I wanted to mention, we do this wealth webinar every single week. Some weeks we have prepared presentations. Some weeks we just kind of talk about what's going on out there. What are some different things happening? Today I just wanted to kind of have like a little roundtable discussion. What does infinite banking mean to us? What does it mean to you in the chat box? So I really appreciate all of the comments and everybody participating in today's show. But, one of my goals with this and our goals every single week is to have you come back week after week after week. And so for those of you that are returning, we really appreciate those of you that's your first time. We want you to be here next Wednesday at 1 Eastern, the following Wednesday at 1 Eastern. And I understand probably better than anybody, t time is money. Time is very valuable. And I understand, we're asking you for 90 minutes of your time every single week to be here with us. So we want to provide that value. So if there are any questions that you have, if there's anything that's on your mind, make sure you ask those while you're with us. We'll answer everything. We're very transparent. We're very straightforward. We want to make sure we're giving you that value. So use the Q&A box. Any questions you have, throw it in the Q&A box, participate in the chat box. And that's why we're here. So I want to answer this question. With that being said, Anonymous said, which do you recommend? Using $7,000 to catch up with 2025 Roth IRA or open a whole life with you? It's a great question, Anonymous. We get that a
Yeah.
lot. Should I do put my money in qualified funds in an IRA or should I do whole life? And there's not a right or wrong answer here. And I don't know if that's what you want to hear, but I'll give you my opinion. And Brian, maybe you can add to it. But there's not a right or wrong answer. So, Anonymous, first off, I would need to know a lot more about your financial situation to be able to fully answer that for you and at least give you my recommendation. I would want to know, okay, how old are you? What are your financial goals? Do you have debts? Are you already investing? Do you already have a Roth IRA or is this new? Like how much is in your Roth IRA? Do you already have a whole life policy? Are you already contributing to one? Like what are you using it for? What is all this? Because we need to be able to know all that to know what is the best way to use that $7,000. Because at the end of the day, let's face it, $7,000 is not a lot of money. It's not gonna make or break your retirement, right? So it's gonna be, but it could be important to your overall plan depending on what else you're doing, right? And so just to be clear about this also, I'm no longer a licensed financial advisor. So I was out of college. I worked for Ameriprise Financial. I was fully licensed, Series 7, 66. And that's what I did every day is I would sit down with people and I would talk to them about their retirements, about their qualified funds. But guess what I never did back then? I never had tools at my disposal like the infinite banking concept, like specially designed whole life policies. No, we sold IULs. Why? Because they made us a lot of commissions and you can make them look very pretty. In reality, they're crap. Okay. Never, ever, ever would I buy or recommend an IUL now because of what I understand. But back then, as a licensed advisor, that's what licensed advisors are taught to do and sell. I didn't have real estate. I didn't have private money lending at my disposal to be able to teach and show you how to go do. So why I love what I do now, even though I'm not legally licensed and can't give legal advice, I can share my experience. I can share what's worked with thousands of other clients over the last 15 years that I personally worked with. And I can kind of look at your overall situation and we can talk through it. And that's exactly what our money mentors are for. So anonymous on here and anybody else, if you have these situations and you have these questions, I invite you to schedule a call with our money mentor team. They'll talk with you. And guess what? Here's the best part about all of it now. If you do need true financial advice, legal financial guidance, we do have now Private Money Club Wealth Advisors. We launched last year a registered investment advisory company, and our advisors, unlike when I worked with Ameriprise Financial and Chris worked with New York Life for 16 years, where we only promoted and sold traditional financial products, our financial advisors and Private Money Club wealth advisors, they can talk to you about private real estate lending, about private real estate deals, about private funds, about the infinite banking concept, about self-directed Roth IRAs. You're never going to hear this stuff from traditional advisors. And so if our money mentors aren't able to look and share with their experience, we do now have our licensed advisors that can help you as well. So just know by scheduling that call, it's a complimentary strategy call. We'll be able to either help you on that call or guide you in a way that will be able to help you in the future, depending on what you want to accomplish. But Brian, anything you want to add on kind of just generally speaking, should they put money in a whole life policy or a 401k or IRA or Roth?
Yeah, I mean, you kind of touched on it already, but for whomever is asking that question, what I would look at is the way that I approach this is you start with the end goal in mind. And so think of it this way, because I like analogies. So imagine you're going to go on vacation. Do you have to know where you're going in order to plan on how to get there? Absolutely, because what if you're traveling to New York versus traveling to Europe or Britain? Okay, one is a car, one is a plane. So that's going to change how you get there significantly because you have that end thing in mind. So as Steve was mentioning, yeah, we'd have to know what are you trying to accomplish? What are your goals? Then we look at the best vehicle to help get you there. It could be the IRA, it could be whole life. We just don't know because we don't know what the goal is. So we don't know what tool is the best to accomplish it. Same thing like if you're trying to drive a nail into a board, you know, what's the best tool? It's a hammer, right? But if you only have, let's say, a rock, it's not going to be the best tool. So we got to know what that end goal in mind to see what the best tool is. That's kind of the way that I approach that. Because I've had 401ks, I've had IRAs and solo and self-directed. I've had all those accounts. And the last thing I'll mention on this one that I think is very important, though, if you are going to hop in the driver's seat, so if you're going to go on vacation, as an example, to that destination, and you're going to be the one driving, you'd better know how to drive that car. Whether it's a 401k or an IRA, you'd better know how to operate it and use it effectively. Because I can hand a hammer to anybody, but if you don't know how to use it, you might hit yourself in the head. And I say that from personal experience because I had all the accounts that were managed by somebody else, made them a lot of money. I got some benefit too, of course. But once I got control of those things in my hands, I'll be honest, I drove that car right down the cliff, right over the cliff, right over the edge, because I had no idea how to manage an IRA. I had no idea how to use a solo 401k. I had no clue. But somebody told me, and this was a not a good financial planner, by the way, told me to do it, but didn't tell me how or why. And so I got in the driver's seat and I crashed. A couple 100,000 one time, lesson learned, 50 over here. So what our goal here for us at the Money Multiplier, BYOB, and the Chris Naugle team is to help educate you so that you can drive it as well. Not just give you the tools, but give you the knowledge and the ability to get to your destination as effectively and quickly as possible.
Yeah,
Yeah,
absolutely.
and Brian, I would add to that. I also like the analogies and the thing I thought about in this particular case is Yeah, absolutely true. We need to know the whole situation. We need to know where they're going. All of that is really critical. And there's oftentimes a lot of tools that you can use to get the job done. Like Brian said, he had a nail. Maybe you could, can we pound it in with a screwdriver? We can. Won't be as efficient as a hammer. But once we know what you're trying to do and you have a clear plan on what you want to accomplish, what I see a lot of people doing, and I see this even in the debt world where they don't have a cohesive plan. And the way I look at it is, let's say you're trying to fertilize an entire football field, but you only have one bag of fertilizer. Are you going to make the first 10 yards look really nice and the rest of the field's going to look crappy because you don't have enough fertilizer? Or are you going to spread fertilizer all over the whole football field and everything looks crappy? So my perspective is let's let's get a consolidation of what you're trying to do. If you're trying to sprinkle a little bit here, a little bit there, put a little money over here, a little money over there, it's just like with debt payment. I'm going to throw a little bit of money at this debt. I'm going to throw a little money at that debt. A lot of times we don't accomplish our goals because we're trying to do too much with too little. And so if we can get focused, build a plan, you might move faster, build wealth faster, get out of debt faster. So all of those things matter. So the way I always look at it is how much fertilizer do you have and how much ground are you trying to fertilize?
Yep.
So we just need to get consolidated and think about what are the strategies and paths we're going to take to accomplish our goals?
Yeah, absolutely. And just to clarify, Steve says 7,000 is a lot of money to a lot of us. And I agree, $7,000 is a lot of money. I meant in the grander scheme of things, $7,000 when you're looking at, retiring, you're looking at retirement, you're looking at, investing to really be able to grow wealth. $7,000 is not necessarily going to make or break, whether you're able to retire next year or not. That's all I meant by that. The other thing I wanted to clarify, Chris said, can I receive a copy of the broadcast as I am getting here late? Yes. So we record all of these wealth webinars and we put them on the YouTube channel. Our YouTube channel, it's YouTube at the Chris Naugle. And we just surpassed 100,000 subscribers, which is super exciting for us. We've worked very hard on building the YouTube channel. So every one of these wealth webinars is placed on the YouTube channel. In fact, if you go over there right now, youtube.com at the Chris Naugle and subscribe, it'll let you know each time we put a new video on or we go live. We also go live on the YouTube channel a few times a week, so you won't ever miss any content. And we do have everything from webinars to one-off videos to fully edited training videos to news segments that go on the YouTube channel. So it's very informative. It's very educational. It's all about controlling your money and becoming your own banker. So we appreciate, especially anybody that's new here joining the YouTube channel. It not only allows you to never miss anything, but allows us to continue to grow and get this very important information out to more people. All right, so here's a good one. So it said you guys recommend to change one thing, and that's where our money goes first. But how do I have my money go to my bank first instead of Wells Fargo, JP Morgan, etc.? And I'll answer that first, Anonymous. So the way I look at all of this is we still need traditional banks. So I still have my checking accounts at my local bank. I still do have a savings account, but it's a whole different reason. I still have my all my accounts, business accounts, everything like that. But the way I look at traditional banks now is I want to take advantage of them. So you have to understand how banks operate. So banks operate by having you give them their money and having the money sitting there in their bank. Okay. So that's why they'll give you higher rates if you have a higher balance. That's why they try and encourage you to have multiple accounts, put more money in, have savings accounts, things like that. So what I do is I try and take advantage of it. So I find out, okay, to have a free checking account, what's the minimum balance I need to have in that account? Okay. And then so I'll put my money into that account, but I'll immediately take that money and move it into my policies. Or if I'm borrowing the money, I'll borrow the money because the money you borrow from the policy does have to go to a checking account. So it goes to a checking account, but it's never going to sit there longer than 30 days. So if I know I have a use for it, I'll let it sit there for up to 30 days. If I don't know I'm going to use it, I'll put it back into my policy. So I'm going to use banks whenever I can. I could even potentially take loans from banks if they give me a really good rate, or if there's some kind of special terms where they're like, hey, well, and then I'll use it. Credit cards, same thing, right? I'll use credit cards, but I'm never going to carry a balance. Maybe I'll do a 0% if I'm usually working on a project, but I'm going to have that thing paid off and I'll never use it again after that. So you want to take advantage and use the banks instead of like the majority of people that get taken advantage of by the banks. That's the way I look at it. How would you guys answer that? I don't know, Brian or Craig.
Yeah, I mean that's kind of the same way I'd answer that question because when I look at it from where your money goes, it's about control. So when you have it in your Wells Fargo account, disregarding the obviously who owns the money, but you control it still. So when we say where it goes first, what we mean by that is before you give up control of it. So when
Yeah.
you pay a credit card company, a car loan, that money's now out of your hands, out of your control. So what we mean is by paying yourself first is maintaining control of the money. So inside your checking account, you still control it. So it's still in your hands before you pay that credit card that goes through your policy, which you control, then you pay the credit card, but you still have control of the same amount of money inside your policy long term. That's all that really means. But I do get that question a lot regarding banking. So keep in mind, so with a whole life policy that's infinite banking, it's not a real checking account like at a local bank because we're not talking about transactional things, paying your cars, paying your bills, that kind of stuff, gas, groceries. That's not what we're talking about with infinite banking. We're talking about replacing the banking functions, which is the borrowing and lending of money with interest. That's what we're referring to. So there's always going to be a checking account with a traditional bank involved in our current, structure we have, because that's the only way you can currently transact money in most cases. So we use that as a vehicle, but not as the holding tank, so to speak, for our wealth.
Love it. Okay, so I saw Shauna was wanting us to answer one more question here. She said,
Yeah.
Rodney's question like this kind of all the mentors use the vault to give you your projection of certain movements you may be planning to use. So
Well,
it's
she's
introduced from the beginning. You can also get access to whatever they build for you plugged into your own account, something like that. Like a mentor will
cool.
use it to do suitability. And if you love it, you can keep it if you get your own account. Do you guys want to
Well,
go?
yeah, Rodney's question
Yeah.
here is this. So Rodney's asking, if I just started working with a mentor, is the vault part of that process or one needs to take additional action? So it's a good question. So the vault, by the way, as we've been talking about, we launched it middle of summer last year. So it's been here for about 6 months, 7 months, through the beta testing as well. So the vault is something that we have, before we even had the software, our team, Craig's team would actually do a lot of the, I guess, work to create the reports, the projections, the debt strategies manually. A lot of work, but with our client base, we want to make sure you guys have the tools that we actually have been using in our own lives and experience for the last, some cases, decades. So the vault is giving you that power. That's really what it is. So we use the vault when we're talking to clients. So I'm as a mentor, I'm going to use it to help map out debt paid out, reduction, loans, that kind of stuff, analyze policies. And then if you want to be in the driver's seat and get into it, you can actually have the vault as well. So we made this available to everybody so that you can have the tools that we all are using right now. So it's additional action, to be honest, if you want to, but you don't have to use the vault. Highly recommended though. But you can go sign up for it 7 day, no cost, test it out, that kind of stuff. But the best thing is to talk to one of our mentors or myself, and then we can walk you through what it would look like in a bit more detail for your situation. Because I'll be honest, if the vault does not make any sense for you, I'm going to say so. In most cases, it does make a lot of sense to use it, but not always. Depends on what you're trying to do.
Yeah, and really the purpose of going through those exercises that I think Rodney was asking is, let's say you have debt and maybe you were doing some velocity banking. We can talk conceptually, yeah, I think that would work, but until we get your numbers in, and a lot of the cases that I'm working on is we'll stress test the outcome. So if you're putting this much into a, especially a designed whole life policy, maybe you have this much in your HELOC and you're going to use both those tools. We'll run the numbers and stress test it and see what is it going to look like now, what's it going to look like in a year, and make some assumptions so that the thing is we never want to put you in a worse position than when you came to us. We always want to put you in a better position. We want to get you out of debt faster and build wealth. So whether you subscribe to the vault or your money mentor helps you figure that out, then like Brian said, you can decide, do I want to subscribe and be able to get in and actively manage that? Great. If not, that's fine too. So, but the whole idea is if becoming part of the infinite banking concept process community, you want to have a place to manage it. You want to have a place to keep track of your loans, keep track of your policies. And I know even before I had this, if I needed to find an old illustration, I'd go hunting and hunting and hunting through all my Google Drives and I'm like, there it is. No, that's not the right one. It was this one. And so now we have a way to put all that stuff into the vault, show your complete family. So for people that have multiple policies, you can see your aggregate amount of cash value. As you build your loans, you can manage those loans. So it's what we're trying to do is make it easier for you to actually be successful with this infinite banking concept process in your velocity banking.
By the way, Stefan, who is the CEO of Private Money Club Wealth that I mentioned earlier, he did put his Calendly link over in the chat box. I just shared it as well. If anybody does want to schedule a call, they are, since it's still, since we're brand new, it's a brand new RIA, we are still doing completely free strategy consultations. So you could talk with a licensed advisor for free just to check out what they have to offer and if it could potentially help you in your situation. And from some of these questions, it sounds like a lot of
Yeah.
you guys could really take advantage of talking with an RIA that understands all of this. And I just want to say it one more time, guys. I was a financial advisor right before 2008 happened, and I was getting out of the career, moving into real estate and entrepreneurship as it occurred. And I stayed in touch with a lot of my friends and coworkers, during that time. And it was a tough, 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 tough time back in '08. I mean, nobody saw it coming. No advisors were warning. Nobody really did anything to prepare, and everybody took the hits. And it affected a lot. I mean, does anybody on here know anybody that they either had to go back to work, couldn't retire? They know somebody in their family, maybe their parents, something like that, that could not retire as planned, and they had to go back. So to me, that's where we're at right now again in this market. And so it might be a good time to talk with somebody that understands alternative investing, things outside of the traditional means that can maybe help you right now position your money in the right places. So take advantage of that link I just posted over in the chat box and get that. Somebody else made a really smart comment over there too, Lucy. And Lucy's been around the campfire. I see Lucy on so many of these webinars. So Lucy's all about learning and continuing to better herself. And she said, real life example, I have a windfall coming up that I want to put towards my debt. If I use it directly to pay off the debt, that windfall is gone forever. But if I use the windfall to pay into my policy first, then immediately take a policy loan, I can use that loan to pay off the debt and then retain that windfall in her policy and her family's financial life forever. So that's a
Yeah.
great way to look at it. If you get that money, pay the debt, that money's gone out of your life forever. Put in the policy first, take it out, that debt's still gone, but now you have that whole entire windfall now for the rest of your life in there compounding and growing, guaranteed, tax-free forever. So Lucy, thanks for sharing. That's a great, great example of what that looks like. And a couple things. I did have somebody ask, my son's 28 and wants to start a policy at 150 a month, or should he put it into a Roth? Again, it depends, but let me cover kind of the premium amounts you can put in a policy. So we look at it as like a guideline minimum, and then we look at kind of like a maximum. How, Brian, can you hit that real fast? Just kind of the way we look at how much somebody should put into a premium, because
Yeah.
150 a month's probably not enough. And if
Be
somebody does
borderline.
have a windfall or a lump sum, can they still put that in, or moving forward? What's that look like? Can you cover that?
Yeah, so let's kind of go through that really quick. So when it comes to a policy, there's essentially two ways that you can fund a policy. You have the premium. Okay, that's monthly, quarterly, or annually, and there's a range on what that is. We'll go through that here in just a second. And then you have what's called the optional dump in, where you can overfund the policy at the very beginning and get that thing jump started. So let's kind of go through what the premium looks like. So when it comes to premiums, there's a range. Now, I get this question a lot. Why is there a range to the premium? Why can't I put in $100? It's called cost of insurance. So cost of insurance means death benefit, by the way. That's how I look at it. So when you're 20 years old, you put in $1 of, premium into a policy, you're going to get like $100 of death benefit. When you're 50 years old, that same dollar is not going to get you $100. It's going to get you like $60 or $40 of death benefit, which means that as we age, we have to put more into life insurance to get the same type of death benefit. So there's a minimum amount of death benefit you have to put in to make infinite banking work. So as we age, since cost of insurance goes up, that means that you have to put in a bit more as we age just to make it work from a foundational perspective. So what is that number? So it's essentially going to be 10 times your age per month. That's the starting point. By the way, that is not the recommended premium. It's just the minimum premium. Okay. So in this situation, son is 28 years old. The minimum recommended is going to be about $280 per month. Could you do 250? Yes. Could you do 200? Probably, yeah. It's still going to work. But what's happening is the amount of death benefit doesn't change, but the amount of cash value that we're putting into the policy is going to be reduced when we lower that premium. So bottom line, 10 times your age per month is the starting point to make it an effective premium. The maximum is going to be right around, so I'm going to go through this a couple times, 20% of your gross income. That's your annual premium. So let's just use this son as an example. 280 per month. That's 10 times his age per month. Let's say that he makes, let's say $50,000 per year. Okay. So what is 50,000 divided by 20%? We use 20% in this scenario. So I'm going to do the math for it. Divided by 12. So that's 10,000 per year. That's his maximum premium. Divided by 12 is $830. So for this son who's 28 years old, if assume he makes 50,000, so 280 per month up to around 800 per month. That's the range of premium that he can qualify for. The more he puts in, the faster that cash value is going to grow. Now, I'm not going to get into the actual details of each of the premium on this right now, but that's the first way. Okay? And then we will walk you through your numbers on the one-on-one calls that we do. The second number, and by the way, the question we always get is, well, what should I put in? Well, until we have all those answers to the questions that, Steve's been mentioning, we don't know that. It's going to be based upon you, by the way, and what what you're comfortable with, what your disposable income looks like, how much you're already putting towards savings and other vehicles. But that's a more in-depth conversation. Then you have the dump in, which can be obviously a larger number, can be 0, could be 5, could be 10. For this example, making $50,000 per year, putting in, let's just say 500 per month, 6,000 per year, that person can put in a $40,000 to $45,000 dump in, no problem. So it's a large amount of money. So generally speaking, that's how that can work right there. Hopefully that makes sense. Any questions, obviously, just let us know.
Yeah, hey Brian, another strategy, if somebody maybe doesn't have the amount right now that they need and can't figure out how to, run it through the policy first, but they want to lock in their health and their age, we can look at what's called a convertible term policy, right? A lot of times we can lock in a convertible term policy for somebody. It's a much lower monthly premium right now, but what that means is the convertible term, it locks you in at today's age rates and your health. So even if something unfortunately happens with your health or as you get older, you can actually convert that term policy that you start today, 10 years from now, into a whole life policy that at that point you can potentially go ahead and the premiums would make more sense at that point. We could do that, right?
Yeah. Yeah, for sure. And we do that. I mean, it's not a common thing because even if you do a convertible term, the only situation where you convert it would be if you're uninsurable in reality. So that's one thing we don't always talk about very much, but yeah, you don't see it very often. But yeah, it's definitely a good way to lock it in. And then Rodney, for your other question, about your situation, yeah, I mean the vault, I mean, yeah, we use it, but if you want to be the one in the driver's seat, then definitely recommend checking out the vault personally. And this is that Warren's got a long question right there, doesn't he? That's a long one. It definitely is. If, in your situation, Warren, and I'm not going to read the entire question. You guys can see it in the Q&A. I definitely would want to, if I'd recommend you chat with one of our people on PMC Wealth Advisors because you got a lot going on there. I'm not going to try to break it all down, but bottom line it is, if you want to build wealth and yet you want the easy way to do it, that kind of does not go hand in hand, in my opinion. Might be a good idea to talk to them about it.
Well, let me answer this. So Warren's just saying, banks are businesses that hire and train people how to work in their business.
Yeah,
So people go
true.
to banks, requesting loans, requesting money. And so the banks have a steady stream of customers coming to them looking for what they can offer. So he's saying, if I become my own bank, how do I find those places to lend my money and those opportunities? And it's Warren. I mean, that's literally exactly why Private Money Club was created. So Chris and I talked about this in 2019, but it made all the sense in the world. The more infinite banking policies we started for people because we had that exact problem right there. See, what we teach with BYOB Money School is how to take back control of your money and solve your money problem. So if it's paying off debt, if it's retirement, we have these solutions. But we also obviously teach you how to create your own banking system with specially designed life insurance. And like Craig mentioned earlier, we have a lot of people that started policies They paid off their debt. They recaptured their money. Now they have all this money sitting in the policies in cash value. And that's exactly what Warren's saying. Hey, I have all this money now in my policy, all this cash value, but what do I do with it? I'm busy. I have a job. I have a family. I can't actively go out there and start a business that I can fund the business with my policy, right? Maybe you have a great job, a great career, or you don't want to go out there and learn real estate flipping. Maybe you don't like flipping houses. Maybe you don't want to own rental properties. Well, there is another strategy in real estate known as private money lending. And that's exactly why Private Money Club was created. And what Private Money Club is it's a community of two different types of people. And let's just ask right now, who's on this call right now? How many of you are somebody that has money and you're like Warren and you're like, I'm looking for opportunities to be able to move my money? How many of you have money? Just say have in the chat box. And then how many of you are the other half who need money? How many of you know that you need more money so you can go out there and start doing better things financially? So write either have or need in the chat box. Let's see what we got. All right. So we have about half the people saying they need money and half the people saying they have money. Exactly. So that's what Private Money Club is. Private Money Club is a community of people that have taken back control of their money. And the majority of lenders in PMC are using policies to lend money on. Okay. So, and the other half of people in Private Money Club are people that have deals, they have opportunities, they're experienced real estate investors, and all they need in their real estate business to do more deals is access to more money. So Private Money Club provides the platform, the education, the tools, and the resources for somebody that has money to meet up and find people that need money, put you guys together so you can make these deals happen in a safe way. Now, when it comes to private lending, there's a lot of you need to know, and we offer a 4-week program that teaches you exactly what to do called Accelerator. So you're using things like promissory notes, mortgages, deed of trust. You're making sure the terms are set out properly. So the borrowers meet the lenders meet the borrowers, and they come together in PMC. So it provides somebody, Warren, like yourself, that's busy. You don't have time to go out there, attend events, find these people on your own. It provides a place for you to go and find people that are ready to work with you. And that's exactly, so I'm glad you asked that question, Warren. It's a great question, and that's exactly what PMC is. And let me show you an example of what that looks like in the real world. So this was a policy that I designed for a real estate investor. She lived up in the Pacific Northwest. I designed this policy for her about 5 years ago. And so when we look at this thing, this is wall of numbers is what we would call a illustration. And an illustration projects out what your policy is expected to do for the rest of your lifetime. So it shows you, how old you are, how many years into the policy you are, what the contract premium is, so how much money is going into the policy each year. You can see over on the far right side what the death benefit is each year for the rest of your life. And then next to the death benefit over on the far right side is the net cash value and increase in net cash value. So again, the cash value is the amount of money that you have to loan from that policy, borrow from that policy each year that you have it. All right, so you guys can see that over here, right? Cash value. So in year one of this policy, we mentioned this, Brian mentioned this earlier, you decide how much you want to put into it. She wanted to put $150,000 in the first year, and then she wanted to put $50,000 a year into it for the next almost 10 years. Okay. And then at that point, it drops down, which we'll talk about why that happens later. But she wanted to put up to $50,000 in each year. Now, that's the maximum she can put into this. She could lower this all the way down below $18,000 a year if she needed to. But nonetheless, she has $50,000 a year going in. Now, you can see over here, the first year she puts $150,000 in. She can borrow back out $132,000. So again, you can't borrow back out the full amount that you can put in, but you can borrow back out pretty close. And that's within 30 days. Now, what she is doing with this policy is she's using it for active real estate flips. So she's putting her money in, she's pulling this money out, and then she's putting it into flips where she's making typically 20, 30, 40% on her money. So she planned on doing this for the next 5 to 10 years, she told me. So we ran a scenario where she did flips using this policy. And then in the 8th year of the policy, she decided that she wanted to do some private money lending. So let me show you what that looks like in the 8th year of this thing. Okay, so in the 8th year of this policy, the increase in net cash value, so the policy grows by $66,000. To get that $66,000 return, she had to inject $48,000 into the policy. So you can see that in the policy premium right there. So she puts $48,000 in, and within 30 days, she can borrow back out $66,000. Is everybody following so far? So that's $18,000 in growth or a 37% cash on cash return on her money that year. Now remember, that's just within the policy. That's happening whether she does anything or not. But what did she do for the previous 8 years? She was taking that money out and putting it into real estate flips. And this is what I cannot calculate, but this is what Craig will be able to calculate using the vault. And Craig, I'm going to have you expand on this in just a second, but let me finish this example. So in the 8th year of this thing, she pulls the money out and she does a private money loan. She finds somebody on Private Money Club. She lends them her money. It's collateralized by real estate that's worth more than what she lent them. But by her lending that money, she's earning 12% on the money she lends. So that year, she makes 12% on her private money loan. She made 37% growth within her banking system. She did pay the insurance company 5% to use the money that year. So net at the end of the day, she made 44% return on her money. Now, let's look at the alternative. If she would have never started this banking system 8 years prior, and she did what everybody else does, she takes her money and she puts it into Wells Fargo, and then when she needs it, she pulls it out. Now, when she pulls the money out of Wells Fargo to use in real estate deals and private lending deals, does the money that she took out of Wells Fargo continue to grow? No, it's gone from the bank. She's using it. That's the primary difference here, is that money that she put into this policy, even when she borrows it out to use it, it's still in there compounding and growing. So those 8 years of the policy, that money grows like this, even if she's using every single penny. Look at this, $530,000 in net cash value. She can use every single penny of this every single year, and the policy's still going to grow like this every single year, even when she's using every single dollar. So what did she do differently? She did nothing different except where her money went first 8 years prior. And that's exactly what becoming your own banker is. Would you rather make a 12% return on your money or a 44% return on your money? And guess what? It gets better and better every single year that she has that policy. Now, with that said, Craig, can you just give me an example of what you're going to be able to show that same example, but using the vault? I mean, it shows the details, right?
Yeah, I can do a quick share of the gain projector. Just know that it's not on live on the Vault site yet, but it will be later today. So yeah, I'll just run through that real quick here.
And this is what I'm excited about is I've been able to talk about this stuff from stage and kind of tell people this stuff on the phone, but now we are actually able to show you exactly what it looks like. All right, good.
So do you see the Vault on your side?
Yes.
Awesome. So what we did in terms of this tool we call the gain projector is we have three different modes. There's easy mode, medium mode, and advanced mode. Now, if you get in advanced mode, there's a lot of it's almost like walking in a cockpit of an airplane. There's a lot of bells and whistles you can do, but if you're really trying to get precise about your investment strategy, this is where the advanced mode sits. But similarly to what Stephen just showed, let's just say, for example, you had some specially designed whole life policies and you want to be able to use the cash value to invest. So you can come down and pick one or more policies, so I could pick that one, I can pick that one and that one. But just for simplicity, I'm just going to show one policy. So let's say, for example, we pick this one that has a $10,000 dump in and we're putting in $1,000 a month. That would say by the end of year one, we'd have about 16,832 available to use for investments. Now, I know there's a question earlier about, hey, should I put all my money if I have some emergency funds in a high yield savings account, or should I put some in a policy? Well, here's the way I kind of think of it is I'd rather have that emergency money sitting in my policy. But if I'm doing that, I'm not going to use it. So let's just say, for example, we're not going to use the full amount. We're just going to go in and use 10,000 of it. The other thing we can do is if you had HELOCs, lines of credit, you might be able to say, I've got this HELOC over at Bank of America and I have 15,000 available. And perhaps maybe I just want to use 10,000 of that. I don't want to fully utilize it. And then maybe you have another $10,000 just sitting around in cash that you haven't done anything with. So what I've done is I've taken 10,000 for my policies. I've taken $10,000 for my lines of credit. I've taken $10,000 of cash. And now I'm going to go down and model my investments. So when we talk about private lending, Stephen shared with you the Private Money Club. Let's say we go out and we learn how to do private lending. We find somebody we want to work with and we put our money to work. And so you can come in and model a start date, end date, and Stephen, you know how with private lending, sometimes those deals are 6 months long, sometimes 9 months long, could be a year.
Yeah.
But you can kind of configure your start and end dates if you'd like. But let's just say, for example, I'm lending money to Stephen. He's got a property at 123 Oak Street. We're going to go ahead and loan out the full 30,000, and we are expected to get about a 12% interest payment back. So let's just say we use 25. There's some weird little thing going on with my system here, but let's just take that. So now what happens, I've modeled that I want to take some money out of my system. I've modeled an investment, and then I can come down and start to configure some parameters. And this is where it comes to when we take policy loans or we take cash value from our policy, we'll have a loan. Now, how do you want to deal with that? A lot of times what I'm doing in my own model is I'll just scrape off some of the gains that I made that year to pay my policy loan interest because I don't want that compounding on me. But as you're modeling, you can turn that off, you can turn it on, you can say, hey, I just want to run it all back into my policy. So there's a lot of different switches you can turn on and off. But essentially, what we do is we then go down, we model, and then we evaluate the results to say, what do we want this thing to look like? So by year three, we put in a cumulative injection of 62,000. We have 63,240 available, and we just keep going year by year by year to see what it looks like. But I'm going to just jump to some of the fun stuff. We have this automated view, and you can download this and run it in PowerPoint or Google Slides, but it just kind of walks you through how much premium deposit are you putting into the specially designed whole life policy? How much are you taking out of that to invest? So we're taking some from our loans, we're taking some from lines of credit and cash, we're putting that into our investment strategy. We generate some gains. And then what I did in my models, I said, I want to take some of my gains and I want to just cover my loan interest in my line of credit and my policy. That's all I want to do. And maybe I want to reinvest the rest of the gains, or maybe I'm using it for retirement. So I'm going to put it in my segregated account and then just use it for retirement income. So you can model this however you want and just see what does it look like over time. And if you want to jump down to, assuming all things remain constant, let's say we jump down to year 10, we can kind of see what the picture looks like. So anyway, Stephen, the whole concept here is you can model out your specific situation with your specific investments and then see how is that going to play out with the arbitrage, just like banks do. Remember, banks are working on arbitrage, which means they're loaning money out at a higher rate to make money. And so we're just testing that to see what does our own investment strategy look like. So a lot of detail there, but Stephen, any questions or anything else you want to jump into with that?
No, it's super cool, man. Like I said, I mean, it's just taking what we've talked about for so long, and I understand in my head what it looks like and what's happening, but to be able to plug it in your actual situation, your actual policy, your actual investments, and visualize it, especially over time. I mean, it's really next level, super cool stuff. And the neat thing with all of this, Craig, is if you're new to this and maybe a little like, oh, I don't know, it's too good to be true, or even just like I'm not sure if I'm ready to do this yet, something like that. Like it's a we can show you all this stuff before you ever commit to anything. So it's not like you're like, hey, I'm
Yeah.
buying this, I'm paying you guys $10,000 and I'm hoping that it happens. In fact, you never pay us anything. Yes, the vault might cost you a few bucks a month if you want to continue to use that. But just from the standpoint of starting a policy, like we're going to talk to you about your situation. You don't give us a dime ever. We're going to talk to you about your situation. We're going to create a plan for you. We're going to show you that plan. We're going to plug it into the vault for you for whatever your problem is that we're solving. We're going to show you how it solves your problem. We're going to do all of this with you. We're going to revise it with you and all of that before you ever actually say yes. And to me, that's what's amazing, is it kind of allows you, even if you're a little um, I don't know, scared. What would be the word? Fearful right now, a little not sure about things, not confident. Like he gives you plenty of time to really follow it and understand it before you have to say, okay, I'm in. You know what I mean? And even at that point, when you say I'm in, you still don't give us any money. The money goes directly to the insurance carrier. See, myself, Brian, Craig, our money mentor team, we're licensed insurance agents, and we work with a half a dozen different insurance carriers out there. And that's where it starts. See, we do all this work behind the scenes. We'll share it all with you. Chris does videos all the time talking about the different insurance carriers and different types of policies. But what we do on these strategy calls is we're simply talking to you so we can understand how to build your policy. It starts with the company. Which carrier is best for your situation, your age, your health? Your amounts of premium you want to put in, what we're trying to solve for you, why you want to use the policy. So it starts with the carrier. And then it goes to the products that the carrier has. We have multiple options there. And then it goes to how we build that product with that carrier to fit your situation. So every single one of you is different and is in a different situation. So every one of you, might have a different recommendation for which carrier we go with, which product, which policy design. But at the end of the day, we're doing this so we can build the absolute perfect banking system for you and your situation. Can that change over time? Absolutely. And these policies are very flexible, but that's why you also open up multiple policies. I mean, I know Craig's got a handful of policies. I've got a handful of policies. I think Chris has like 15 or 16 of them now, family banking policies. I know the Kesslers. I was talking to Hannah over the weekend. I think the Kesslers as a family have like over 100 policies now or something ridiculous like that. So
Jeez.
you just grow your family banking system as you evolve and as things change, in your lives.
Yeah, and Robert asked a question, do we need to have new policies set up or can they use existing insurance and annuity policies? So, Robert, you can use existing policies. Now, I don't know if those were designed for using in the infinite banking concept process or if they were traditional whole life, but we can always look at that. But if you do have an existing policy that has cash value, yeah, you can definitely put that to work in private lending. You can use that for debts. You can use it for major purchases. So you don't have to start fresh with a new one with us. But if you're wondering, does it make sense to use that one? We can always have a discussion and take a look at it.
All right, cool. All right, so we got about 10 minutes here left, 10, 15 minutes. Of course, I want to answer any other questions that we missed out on. I know, like I said, today, wasn't like a presentation where we start from the beginning, we go through the mindset, we show some case studies and testimonials, kind of show you the solution. We do a lot of that on these wealth webinars also, but I wanted today be more just an open conversation, kind of where are we, things like that. So if you do have any questions, but I also understand if you're new here, today might have been a little overwhelming for you. So I wanted to give you guys these last 10 minutes or so, just some different resources, ways to follow along and continue to learn. So first off, we do 6 live webinars every single week. All 6 are new, they're fresh, they're different every single week. So you can join us not only for Wealth Webinar every Wednesday at 1 p.m. Eastern for 90 minutes, but you can join us for our other 5 webinars and shows that we do every single week. So we'll put the link over in the chat box for that in just a second so you can follow along with all of the shows. And I would invite you to do that for sure. We do a Ask Me Anything every Wednesday at 4:30 Eastern. That's live streamed on YouTube. That's really good. If you have a quick question or something you don't really want to hop on a one-on-one call, you can do it in a group way. So we do those 6 webinars. We also do orientation calls each week for people that are just starting their policies. We're launching the Bankers Only Club very, very soon. Like Craig talked about, he's doing the cracking the vault code webinars every other week right now. So we have lots of different ways to support. Of course, I would invite all of you to do a strategy call. So I'm going to post that link one more time over in the chat box. So every one of you on here should book that call right now. So book a call, that link right there, book it at your convenience, but talk with our money mentors. Where are you now? Where do you want to go? Let us talk through this with you. What does infinite banking look like in your life? Do that. If you want to continue to learn, we have a couple ways to do that upcoming, okay? We have a live in-person event. We call it the PMC Money Tank. We've been doing the Money Tank for 3 or 4 years now, so this is like the 10th one we've done. And we always have about 50% of the audience are people that come to a bunch of the money tanks because they love it. And the other half are people that are newer to it. So you get a good range. Always about half of the audience at Money Tank are people that have money, and the other half are people that need money. So webinars are great, YouTube videos are great, books are great, audiobooks are great, but the ultimate is still being able to meet somebody in person, look at them in the eye, shake their hand, go have drinks with them in the evenings, go have dinner with them, go have breakfast with them in the mornings, right? And so we have Money Tank coming up. It is in Atlanta, Georgia, May 1st and 2nd. Now there is a VIP reception April 30th, so that Thursday, but the main event is going to be May 1st and May 2nd, Friday, Saturday in Atlanta, Georgia. I'm bringing that up now because it is a live event. You're going to want to start booking your flights if you're flying in or figuring out how you're going to get there, and then book your hotel. We do have a room block set up at the hotel with a significant discount. So make sure you take advantage of that discount and that room block. So commit to it now, get your travel scheduled, buy your tickets, and get your room booked. I always say when you go to a live event, go VIP. I was just at an event in Tampa, Florida, Money Game Live this past weekend. The entire Friday was a VIP day. We went and we toured a mobile home park. We did a hot seat session, and we had dinner together. And the conversations I had at the VIP part of it probably were more valuable than the entire other 2 days that I was there. So always go VIP because you're going to be around other like-minded people that are serious, and you're going to be able to really develop those relationships that are going to make all the difference in the world. Because at the end of the day, we can learn everything, we can get educated, but until we go out there and take action, it's useless knowledge. And a lot of times it might take a partner, it might take somebody to kind of push you over that edge. And a lot of times at these events, it's those relationships that allow that to occur. So I highly recommend doing VIP, or if you can't make it to VIP, definitely get there for the event in person. Now, before Money Tank, we do have what we call the BYOB Blueprint Virtual Event. It's 3 full days. It's right here on Zoom, but it's a Thursday, Friday, Saturday coming up. It's going to be March. It's just in a few weeks from now, 3 weeks from now, March 26th, March 27th, and March 28th. It's the BYOB Blueprint event. So if you liked what you heard today, but you're like, man, that was a lot. Like you guys were kind of all over the place. I really want to get a more structured look at this. I want to get a more in-depth, more advanced look at everything that you guys do. The 3 days is where it's at. There's no way I could teach all this stuff during 3 days, but we can teach all that during 3 days, right? We can't teach it during 90 minutes, but we can teach it during 3 days. And so those 3 days are structured in a way where we are going to spend the entire first day on money mindset. How does money flow? How does advanced infinite banking operate? What does it mean to have a family constitution? So we're going to spend the entire first day from 10 a.m. Eastern until 5 or 6 p.m. Eastern getting into the money mindset. Day two of the BYOB blueprint. We are going to dive deep into becoming your own bank, how to control your money. And then day three, opportunities, taking action, investing, lending. What does that mean? What is real estate to you? And there's so many different ways that we create wealth. Okay, let me just give you a quick example of some of the stuff that we're going to teach during that 3 days. And so you can see right here, creating wealth multiple ways. What is your strategy and is it the right time? So we're going to talk about active real estate. What does it mean to be a wholesaler? What does it mean to be a flipper? What does it mean to get into commercial properties, whether those are multifamily apartment complexes, mobile home parks, development, shopping centers? We are going to talk about rentals. We're going to talk about slow flips, the slow flip strategy. We're going to talk about seller financing and note investing. We're going to talk about my favorite thing, the ultimate of real estate investing, which is the passive side, private money lending. We're going to talk about how you can use infinite banking as a business owner. Craig and the advanced services team, they do this all day, every day. Talk about working with business owners on how infinite banking can work for you and your business, especially when it comes to succession planning and things of that nature. We're going to hit a little bit on stocks and options and bonds, but not spend a lot of time on that. Why? Because I don't think the timing is right for it. Unless you get into a very advanced options trading course and you're doing day trading and taking advantage of volatility, maybe it's a better time. So what we're going to talk about though is how to use your stock portfolio, self-direct that possibly into some other alternative investments, right? We're going to talk a little bit about cryptos and we're going to talk a little bit about gold and silver and precious metals investing. So just some of the various things we're going to hit on when it comes to opportunities and growing wealth during that 3-day training. And yes, we will have some preview events leading up to that. They're going to tell you more about how all this works, but I wanted to get this stuff on your radar. Now, with all that said, let me share a few links over in the chat box so you guys can register for those webinars, get the call scheduled, join us for Money Taken Atlanta and the virtual 3-day. Craig, is there anything you want to kind of add? I see a couple questions over there. I don't know if we want to hit a couple of those while I put these links out real fast.
Yeah, sure. There was one I wanted to go back to Deborah had asked. So Deborah had asked, when you take money out in retirement, is it taxed? And the whole life policies are great strategies for retirement income because if you're familiar with how retirement income works with your health benefits through your Medicare plus the Social Security, those retirement funds can increase your taxable amounts, which also increase your income, which means your health insurance costs more and your Social Security gets taxed. So when we look at using whole life policies for retirement or supplemental retirement income, there's two ways of getting the money out. One, you can take loans. Loans are never taxable. However, I've run the numbers many, many times for retirement. A lot of times what I'm seeing works best is taking withdrawals. So instead of taking a loan, we only do this at retirement. We're not talking about when we're operating infinite bank into our lifetimes, but when we get to retirement strategies, you may take a withdrawal. That withdrawal is also tax free up to the cost basis. So what I mean by that is that let's just say you've put in $100,000 of premium over the years, you can take $100,000 back out in withdrawals tax free. As soon as you take that next dollar, it's taxable. So the strategy we use for retirement is to take withdrawals to cost basis, then switch to loans. The other benefit of that is it does not impact your Social Security calculations for taxes or your Medicare for taxes. It's the IRMA thing, if you want to look at it, IRMA. So that's the strategy that could work well for retirement.
All right.
There
Yeah,
was there were
Greg, I
three
put the weekly
more.
webinars over. I put the YouTube channel, the Money Tank, for those of you that want to join us in person, and then the BYOB Blueprint event. That's going to be March 26th through the 28th. Again, they're all live events, and I would invite you to honestly all of those, and then more importantly, get a call scheduled with a money mentor. Let's talk through it. They can tell you more whether or not these things are right for you, and we can help you out that way. So I'll put that link to schedule a call as well.
Yeah, so then we have four open questions. If you want to, we can run through those real quick. Like, so Anonymous is asking if you come into a large sum of money, like a tax return or something, does it make sense to open up a new policy and dump it in or use it to pay down debts? And Anonymous, this is where there's a lot of dependencies on what makes sense. We'd want to look at your cash flow. We'd want to look at your entire situation. So can it make sense to start a new policy? Maybe. Does it make sense to maybe just throw out the debt? Maybe. There's trade-offs with each. So what I would encourage you to do is just schedule a call if you don't already have a money mentor you're working with, and let's figure it out. Let's look at it. And then Jalen is asking if I start off with a small amount of 300 a month and my income increases and I want to put more in, do you have to do you have to restart a new policy or modify the policy? So Jalen, there's some artwork to policy design where we can build in some flexibility for extra premiums. We need to look at, what that would look like for you. But if you've already maxed out your policy, and this is a good problem to have. So I mean, right, Stephen, if we're making more money and we've maxed out a policy, that's a good problem to have because that's when we start more policies. And that's why all of us that have been doing this for a long time have multiple policies because we started at one spot, we max it out, we can't get any more in it on a year by year basis, so we start more policies. So I'd say you have the ability to build a policy with some flexibility. But if you max that sucker out and you need to get more money in, that's where we start more policies. Robert's asking, is the March blueprint event a repeat of the previous January, February blueprint? So that's probably something more for you to answer, Stephen.
Yeah, so it's going to be similar. We have, I think, we removed two or three speakers, replaced them with two or three new ones, and then because it is live, the content's different. So, it's not going to be the same, but so it's going to be similar, Robert, but different.
Yeah. And then Christian's asking, what is this bankers only club you speak of?
Yeah, yeah, I guess I did mention that. So Bankers Only Club is just our new community. When you start a policy with us, you will be entering the Bankers Only Club, and you'll be in the Bankers Only Club for life as long as you have the policy. And it's going to just be really, Christian, to put it bluntly, just better service and better engagement with our clients. So it's just a new name for our policyholders community, and we'll be officially launching that later this year.
And then K8 is asking if I've maxed out my brokerage count, maxed out my IRA, can I transfer some of that into a whole life policy and still trade with a broker of my choice with the policy? So the one thing to realize is anytime you have qualified money, you say you have qualified money in an IRA, in order to get that out, you're going to need to take distributions, which means you may end up paying the 10% penalty if you're not 59 and a half, and you'll have some taxes. But once it's in the policy, then you can take the loan from the policy and you can do whatever you want with that. So anyway, there's some tax considerations, and that's almost where Stefan on our team, maybe book a call with Stefan and our PMC Wealth folks just to kind of work through some of that. And then I see one more from Robert. Robert saying, I thought most insurance policies were first in, last out for withdrawals. Am I wrong? So Robert, what we're talking about there is just what in terms is taxable. So if you're taking withdrawals from the policy, they're looking at what is the cost basis. So if you've put in 100,000, you can withdraw up to 100,000 tax free, but as soon as you go over that, then you're going to get taxed. That's why we would switch to loans at that point. I think that's what you were asking, but it's a withdraw to cost basis strategy and then switch to loans to keep us out of taxes.
All right, one more on the buzzer coming in. Okay, the main part of the
Nope.
question is, can I trade whole life policy with broker of my choice? Forget the IRA. I want to know if I can transfer individual cash account, have to sell. Yeah, you would need to cash out of your positions. The way the policy works is, Kate, you take cash, you take the cash, you put it into the policy. Once it's in the policy, then within a few weeks, you can borrow it back out into cash again. So if you have all your money in stock positions right now, you can't transfer those stock positions into a policy. If that's what you're asking, you would have to cash out of those, take the money, get into the policy, then take it out, then rebuy those positions. Hopefully that clears it up.
Yeah, and I guess the other potential there is if K8 had a margin account, they could take that margin. I'm not a big fan of that, but you could take that margin, put it in the policy, pull it out, and then do the other thing. But so that the margin account would be the only way to really do it, no margins. Okay. So, whenever we're using debt to
Correct, Kate.
fund
Correct.
a policy, we really need to be careful with that. It's not that it can't work, we just need to be careful with it.
All right, cool. And last one, Robert said, what's the all-in cost for your platform? Well, I'll go through all the things I just talked about. All the weekly webinars are free. The daily YouTube content and live streams are free. To schedule a call with a money mentor to talk through your banking system, to start a whole life policy. We don't charge for any of that stuff. It's just all part of being a client with us. Remember, we get paid a commission directly from the insurance carrier, just like any other insurance agent out there in the world. We make a reduced commission because the majority of your premium goes to what's called PUAs and not the base, and the commission's really paid on base. So it's a reduced, but that's how we get paid. So there's no charge for the money mentor strategy calls, any of that. Money Tank, I think it's 600 for GA and 1200 for VIP, give or take a couple bucks. Like I said, the price is constantly changing. It's increasing until we get there. So if you want to join us in Atlanta for the in-person event, it's like 600 or 1200 depending on which ticket you want. And then the BYOB Blueprint event is $49 for GA or 97 for VIP. The vault is what, like 500 a year or something? Craig?
So there's monthly and annual plans, subscriptions within the vault, and if you're using infinite banking, velocity banking, and looking for the full, the full capabilities, it's 49 a month or 490 a year.
Okay, cool. So basically, you can get a policy started with us. You can attend all of the trainings and everything that we do. You can attend Money Tank VIP. You can attend the 3-day virtual, and you can buy the vault for a year for under $2,000. So if you want an all-in price, that's kind of what you're looking at. All right, well, really appreciate everybody. Thanks for being here, guys. If you need anything at all, you can reach out to myself, Craig, our team. We're here for you. Like I said, highly encourage you to schedule a call over there on that link. Join us for the events, for the webinars, and everything else. Hope you have a great day, and we'll talk with you soon. Thank you. See you, Craig. Thanks.